We have further evidence that there's some signs of thawing in the housing market. It is Tuesday, July 29th, and this is Markets with Megan. If you like this podcast, please, you can subscribe, hit that alarm bell, share it with friends, family, or colleagues. But we're here as usual to go over some of the economic data that we've received, and this is a very busy week. We're going to come out with several Markets with Megans on a regular basis because we're getting economic data across a variety of different segments of the economy. So let's start with housing. First, the S&P CoreLogic Home Price Index that we look at comes out with a couple month lag. So we're getting data here from May. And actually, home prices declined for the third consecutive month now in May. They were expected to fall, but they fell a little bit more than the expectation. When you look on a year-over-year pace, prices are now rising about 2.8% year over year. That's pretty low compared to what we've seen over the past couple years. And that is the lowest annual price gains we've seen since 2023. Now let's break apart that monthly data and what we've seen across the different cities that are monitored. There's 20 different cities monitored, and 12 of those cities actually declined in the month of May. It was led by price declines in Los Angeles, San Francisco, and Seattle, so western cities seeing the biggest decline. We did see some pretty steep increases in some of the East Coast cities. Look at Boston and New York. They led the increases. We also saw price gains in Cleveland. Now, I know it may sound counterintuitive to say that price declines are positive, but the housing market has been in recession for several years now, and that's because prices have been so high and supply has been so low. In our Markets with Megan last week, we talked about some of the data we received on housing sales, and we've started to see inventories tick up a bit. This is good news, but as you see more supply come in the market, prices fall. Now, prices falling is good news for the Fed. It's good news for inflation because housing does make up such a big component of our inflation indices. So while this may look negative on the headline, this is actually signs that some of those housing challenges may be subsiding here, and we may get some pickup in the housing market over the next 12 months. If you want a further history of our podcast, you can go to marketswithmegan.fm. Thank you.